Hello and welcome. My name is Jason Jedlinski. I am the Hill's General Manager, and I'm delighted to welcome you all here today to our discussion on securing America's retirement. I'd like to thank the American Investment Council for their support of today's conversation. A recent Gallup poll shows that 63% of Americans are worried about having enough for retirement. According to Gallup, it's the first time since 2016 that 6 in 10 Americans have been this concerned about their retirement. In this moment of anxiety, officials are increasingly turning to investment in private equity in an effort to bolster funds. Millions of public sector workers currently have private equity as part of their investment portfolio, and today we're going to talk about how diversifying portfolios to include private equity might affect retirement security and the kinds of returns that Americans might expect. What policies might ensure a secure retirement for more Americans? We're pleased to be joined this morning by members of Congress, economists, and investment officers who will help shed light on this important issue. But first, a few housekeeping notes. In addition to our audience here in the room, we're also live streaming this event on thehill.com and social media. Please keep your phones on silent for the duration of the program, but do join the conversation on social media. You can follow us at The Hill Events on Facebook, Twitter, and Instagram. We'll be using the hashtag #TheHillRetirement. And finally, for those here in the room, we will be sending out an electronic survey after the event, and we'd love your feedback. With that brief introduction, it is now my pleasure to welcome our first guest this morning, Senator Pat Toomey, the Republican senator from Pennsylvania, the ranking member of the Senate's Banking Committee, who serves on the Senate's Finance Committee. In addition to his public service, the senator has also worked in the financial services industry. He'll be joined in conversation this morning with our moderator for today's discussion, the Hill's contributing editor, the one and only Steve Clemons. Thank you.
Thank you, Jason. Hey, good morning, everybody. It's sort of weird to have all of you back in real life, so thank you. And I know there are many people online watching us. We all love you, too. And I think you can tweet, you can send questions, but thank you very much for joining us all. Senator Toomey, it's great to see you again. You're a guy who's sort of obsessed with the retirement picture. You've been at this for a while. You're not returning to Congress after your term.
Correct.
And you've made this one of the pillars of what you want to make sure you put, a stake in the ground before you take off out of that wonderful body you work with. So What's going on there? Why has this become such an obsession for you? And I say obsession in a good way.
Yeah. Well, thanks very much, first of all, and thanks for having me. But the way I think about it is we have been part of this fantastic, wonderful democratization of our capital markets. We have seen ordinary Americans, working class folks, who, when I was a young child, had absolutely no investments. They lived paycheck to paycheck, and if they had savings, it was in a statement savings account at the bank. And you earned as much as you did. And that was it. You had no other alternatives. If you did accumulate enough savings that you thought you'd buy some stocks, transaction costs were enormous. Fees and commissions were huge. Bid-offered spreads were wide. So, the domain of investing in this enormous growth machine of the American economy was left to people who were very wealthy or institutions. And what we've seen over the last decades.
And then we got Robinhood.
And now we've got Robinhood. No, it's great.
Is that a good
perfect.
thing?
Absolutely. It's a great thing. It is a continuation of this process that makes it easy and affordable for people to participate in the accumulation of wealth. And that's a great thing. A big part of that, let's be honest, for most Americans, their wealth is tied up in their home, which that's not something you trade. But the other big category is retirement savings. Mm-hmm. And so for me, this is just a really, really important part of allowing ordinary Americans to have a better life and a comfortable retirement.
Well, one of the things we're kicking around today is the American Investment Council. They're underwriting today's forum, and they have released a report which we're going to, I think, kick around a little bit today. But they've looked at the role that private equity has played in the way at least some Americans' retirement is being handled, and and honestly, they're very proud of it because the robust returns are there. As you look at that part of the picture, of the retirement picture, how significant is that asset class to you? How important is what we're seeing in the equation of retirement success being linked to some of what's happening in the private equity
world? I see the way you're leading up to my legislation. I appreciate that. But so it's so important, right? For a few reasons. One point I think you alluded to is really excellent returns, right? The numbers for private equity have been very, very good. And it's not just because the best stock pickers in America happen to have decided to be in private equity. It's the fact that most of the most successful private equity firms add value to their portfolio companies. That's their real reason for being successful. They have developed an expertise, very often it's industry specific, where they make an investment and then they immediately begin to add value in the management and the operations of that company, and through the networks that they have, they bring an awful lot to the table. So there is a good reason why they have been able to have very high rates of return and performance numbers. And one of the things that I have wanted to do is to expand the categories of asset classes that ordinary people can invest in, very much including private equity for these reasons, but also including other categories as well that are still mostly off limits.
And lo and behold, you have written the Retirement Savings Modernization Act.
Imagine that.
And so tell us about the Retirement Savings Modernization Act, because my understanding is not a lot of folks have actually read it yet. So can you reveal some of the key pillars of it?
I can. So they haven't read it yet, in part because we have not formally introduced the bill, only because we have not yet nailed down a Democratic co-sponsor. I think we'll get there. Any help will be welcome, but we're talking to a few folks who are interested. But here's the idea, right? We all acknowledge that high net worth individuals, big financial institutions, family offices, you name it, every category of investor with a lot of money invest in a wide range of asset classes. They're investing in real estate, they're investing in private equity, they're investing with hedge funds, they invest in commodities. It's part of a well-diversified portfolio. Everybody does it. The one big quasi-institutional category that can't do it, as a practical matter, it's not necessarily technically that they can't, but as a practical matter, are defined contribution retirement plans.
Right.
And there are 8 times as many defined contribution retirement participants as defined benefit plans. It's a huge category. It's more money. It's more people.
Why is that?
So why is that? Great question. So the reason is these plans are regulated by the federal government under the statute called ERISA. That's the acronym for the retirement legislation that governs us. And in ERISA, the language is ambiguous as to whether or not it is fully permissible for the asset manager to invest in these asset classes. And the fair is, if an investment manager, if the asset manager for defined contribution plans did invest in alternative assets and something went badly, they could be sued merely for the fact that they invested in these other categories. If you're in a defined contribution plan, a defined benefit plan, as long as the manager makes the payments obligated, nobody's harmed. And so the risk of litigation is much, much lower. The risk is considered to be unacceptably high. So all our legislation does is it makes it clear. By the way, with respect to both.
And I don't mean to interrupt you, but I really don't know the answer to this question. We've got experts here in the audience and online that will. But how solvent are our DB plans now? How defined plan? I mean, one of the big issues is obligations, resources, retirees, and defined benefit. And one of the big moves from defined benefit to defined contribution is the fact that we were that people were living longer, that it was a problem of solvents. How solvent are those?
Well, as you know, it varies. On the private side, the strategy, if you've underinvested for too long, is to come to the government and get a federal bailout.
Right.
We have state and municipal plans that are wildly underwater. Now, we had a massive rally up until the beginning of this year, which helped a lot. But my understanding, and I've not studied this closely recently, Steve, but my understanding is even with that rally, many of the biggest plans are still significantly underwater. And with the sell-off that we've had in virtually all asset classes this year, I got to believe that they're underwater. So that's a problem. But anyway, back to the legislation. The idea is very simple. You make it clear that an asset manager would not be violating their fiduciary obligations solely by virtue of investing in an alternative asset class. All the other obligations of all the other fiduciary obligations still apply. You still have the diversity requirements, you still have all the prudential requirements there, but you don't systematically exclude this enormous category. And by the way, It's commodities, it's precious metals, it's hedge funds, it's private equity, it's all of those categories that are
And
completely
dare I
unavailable right
ask
now.
crypto?
Sure, yeah, crypto too.
And so in the crypto front, I was with the guy who's the head of the Crypto Association in Washington yesterday. I said, "How you doing?" He says, "I'm a little wobbly." And I had just had 3 companies go under.
Yeah.
And so when you kind of look at that and kind of look broadly at the question of retirement, is there not, it's one of the things, to come into the private equity and performance of looking at performance over time. And it's like, we all know in investment there are no guarantees in life, right? So, but part of it is how to look at constructive long-term investment and gains in performance.
Absolutely.
And do these other asset classes have the performance criteria that you think deserve for inclusion?
Yeah, so first of all, the only one that I can think of that is truly new is crypto, right? Commodities,
Right, real estate,
thousands of years, real estate, thousands of years, right? So there's very, very long track records for all of these other categories. That's not an issue there at all. With crypto, I think you do have to divide the crypto world also into there are different categories of crypto, and you have to acknowledge that much of it is very speculative. And so, okay, it should be treated accordingly. Your fiduciary obligation as the asset manager would be to be very careful and to make sure that the overall portfolio is very diversified. This presumably should be a small slice of a retirement portfolio, but I think it'd be a big mistake to exclude it. We just don't know where this is going, and I actually think the underlying technology is very, very powerful. So yes, I think crypto is on the list and should be on the list.
Who are you, well, I know it would compromise you to ask who. Why not Joe Manchin?
I don't want to suggest I have no objection to Joe Manchin. Joe and I are good friends. We do a lot of work together, and he might very well. I don't think I've had a chance to actually speak directly with him about it.
So when you're back in the Trump White House or the Biden White House, who would be the opponents to what you're trying to do? Who's unnerved by what Pat Toomey is trying to do with retirement modernization?
Well, to be very candid, I have some colleagues who've been extremely vocal about a hostility to the entire private equity activity. I think.
Why? Where does that come from?
Look, they mischaracterize it grossly. And look, has there ever been a case where a private equity firm has bought a company, leveraged it up, slashed and burned, and then flipped it for a small gain? I'm sure that has happened. They characterize that as the fundamental business activity of private equity. That's wildly wrong. And they have this ingrained hostility. And it's totally misplaced, but that I think is the likely source of pushback.
When you look at...
Which, by the way, is completely inconsistent on their part because they have not attempted to preclude private equity investment on the part of defined benefit plans.
Right. So it's an inconsistency on that front. And it just raises an interesting thing. I was talking to some of our friends in the American Investment Council, they say, where does this come from? And I do know, some of those cases in the past, but when you kind of look at data, you look at, today we're going to have, I think, some folks on stage that are responsible for some of these major pension funds and their performance.
Yeah.
And it's very impressive during a time, frankly, where there's a lot of economic anxiety in America. And I think one of the questions is we're looking at with retirement, and I think even today we're looking at one portion of that picture. But if you look broadly at American economic anxiety and what kind of, I talked to Nancy Lamond at AARP, and Nancy says the future of retirement is work. And so, but I kind of think in this realm, I know you're doing this piece to broaden the opportunity, but what would you say when it comes by way of private equity and kind of looking at the performance which they're publicizing and putting out there? What's the, from your perspective with presidential administrations, is the story that might turn that around? Might turn their impressions around of the contributions of private equity?
There's a handful of folks that don't want to turn around. Right? They're not interested in looking at the facts and coming to a different conclusion. So we've got to just accept that we're going to do this without them. Right? I've never expected that this was going to be 100 votes in the Senate. But I'd be quite happy if we're over 60 and we're able to pass this, which, by the way, I think we will do.
Oh, that's interesting. So, and you're also part of the Secure 2.0 Act? Mm-hmm. Tell me about that.
That's the House bill, I think.
Okay.
Right? The Secure Act, I think, is the House bill. There is a Senate version, so to speak.
Okay.
And it's a wide, long list, and I don't have it all committed to memory, Steve.
Neither did my notes here
Yeah,
with my team.
But it's a long list of modest, but I think all constructive reforms in the rules regarding retirement accounts. When you have to withdraw, how much money you have to withdraw, under what circumstances. I have several pieces of legislation that are part of it that are designed to provide fairness, for instance, for state and local law enforcement officers who, after 20 years of service, federal employees have been able to do things that state and local have not. So it's this wide range of measures that makes it more attractive to save more for retirement.
Let me ask you finally, and I think we will take a question from the audience. I know you've got a hard out at 8:50, but I used to work for Jeff Bingaman in the 1990s, and I can't remember the savings plan we had. I'm sure we had moved from a defined benefit to and I definitely wasn't going to work for the government for 20 years, so I didn't worry about all that. Right. But by way of whether it's thrift savings or whatever plan is up there covering you and other Senate employees, are those plans experimenting at all with some of the suggestions you have made about modernization? Are they looking at other asset classes like private equity with regard to, so I'm always interested in the gap, if it exists, between what the government is doing to secure its own retirement benefits for its employees versus what's happening out there in the private industry.
It's a great point, and I have not focused on that very closely. My experience from my own personal involvement in the thrift savings plan, which is what's available to all federal employees, and Congress has the same access to it, no different than any other employee. They're it's quite a narrow list of choices. Like you've got a traditional government bond fund, you've got some other quasi-fixed income fund, you've got emerging markets, you've got domestic equities. But it's pretty limited, as I recall. Now, maybe I'm missing something, but I think it's a pretty limited list. And you raise a good point.
So that might be an interesting
It'd be a
point.
great place to allow for another whole range of investment options.
Well, Senator Toomey, thank you for sharing this. Let me ask if we've got a question or two in the audience real quick. Questions? Comments? I'll pick on someone. Yes, right here. He's with Tax Notes.
Okay.
Go ahead.
Hi, Ben Guggenheim for Tax Notes. So there have been 3 iterations of this, of the EARN Act and the Passport-Min-Cardin legislation, one in 1996, one in 2001, and one in 2006, all kind of based on the same premise that if you raise required minimum distribution ages, catch-up contributions, you're going to incentivize people to save more for retirement. But back in 1996, half of Americans didn't have retirement, and a 2022 survey by the Employment Research Benefit Institute shows that today half of Americans don't have retirement. So wouldn't that indicate that the whole approach to incentivizing retirement savings by loosening up investment decisions isn't working if over the span of more than 2 decades, half of Americans still don't have any retirement savings?
Thank you.
Yeah, so I'd welcome the actual data you're referring to. I'm surprised to hear a characterization that the percentage of Americans with retirement savings has been flat for multiple decades. That does not sound intuitively consistent with bits of data that I've seen, but if you've got data to the contrary, I'd be happy to look at it. The other point, of course, is even if that's true, then that doesn't necessarily mean that these incentives are not constructive and that they're not helpful. There obviously are many other factors that would contribute to whether or not people have retirement savings and to what extent. But I'd welcome a look at the data that you're referring to.
Well, I think, just to wrap up point, it does raise an interesting point that if you have, it's one thing I think about the conversation today, and we talked about defined benefit plans, that if you're fortunate enough out there as a worker to have the social contract in your employment history, that you have this savings, there are options that are becoming much more interesting out there and diverse and high performance like we're discussing today. But if you're not in those systems, then you're back in the Nancy Lamont box that you're just going to work, until the end, and the retirement dimensions of that are much more bleak. And do you see anything on the horizon that's that's hopeful, that deals with the bleak side, to get to your point, of Americans who are not covered by retirement?
I just think we've got to continue to increase the education for Americans. I think it's apocryphal, but the line attributed to Albert Einstein that the most powerful force in the world is the force of compound interest. It's really true. I mean, if you start saving modest amounts of money as a young adult, even if it's painful and clearly you don't have a tremendous amount of excess money, boy, you're going to be really glad you did when you reach retirement age. And we've got to continue to proselytize that.
You have about a year and a half left of events with the Hill.
I'm not sure what you're. I
Oh
leave
no!
office
I guess you got half a year.
Yeah.
Half a year left.
Don't try to keep me here longer than I.
Half a year. What are you going to do next?
Oh, I have no idea. I've got nothing lined up. I'm not a doctor or a lawyer or somebody who's got a shingle and can hang and go back to the old profession. But I'll find something. The important thing for me is to run through the tape here. I've got this extraordinary opportunity. I'm the ranking Republican on the banking committee. That's a new responsibility for me. And I want to accomplish everything I possibly can in this last sprint, cross the line, and then I'll find something to do.
Final question as you leave this institution. I'm interested in your sense of the temperature on whether we will get back to a point where bipartisan efforts are the norm and not the boutique exception.
Yeah, I've wrestled with this question for a long time, and I do think the Senate needs some tweaking of some of the rules. Certainly not elimination of the filibuster, but there's some things we could do that would acknowledge that we're in a different political culture now, and a different political culture requires different rules to allow the Senate to function well. But look, we're polarized as a nation. We're polarized here in Washington. My theory has always been to find common ground where you can, take small victories, and hope that it builds and creates some momentum. I will say for all of the polarization that's very real, when the chips were really down during the pandemic crisis, Congress came together and we passed a series of bills that were massive. They were unprecedented. They were huge. They caused a lot of heartburn for a guy like me in a variety of cases. But we felt that since the governments across the country were shutting down the economy, we had to step in and really replace lost income on a scale that none of us had ever imagined. And those bills passed almost unanimously. So in the end, we did too much of that. But the point is, Congress was able to come together and do some very big things at a moment when the country needed it.
Well, ladies and gentlemen, Senator Pat Toomey, thank you so much for joining us today. Terrific, and good luck on this legislation.
Thank you very much.
Thank you.
Yeah.
Thank you again to Steve and Senator Toomey.